Welcome to my deep dive into Organon and Company, a global healthcare company you'll find on the NYSE under the ticker OGN. The big question today, can its stock price soar to $1,000? I'm breaking down Organon's strengths, weaknesses, financials, dividend history, and future outlook to get you that answer. First, a quick overview. Organon specializes in women's health, biosimilars, and established medicines, offering around 70 products. They're a global player with about a third of their revenue coming from the US. Two of their biggest growth drivers are Nexplanon, a contraceptive implant, and Vtama, a dermatology cream. Let's talk strengths. Organon's got a diverse portfolio and a solid global reach. Nexplanon alone is expected to hit $1 billion in revenue by 2025. Vtama is set to cross $150 million. Their biosimilar lineup, like Hadlima, grew an impressive 57% just in Q1 of 2025. Organon's also been smart about cutting costs and expects to generate $900 million in free cash flow for 2025, which is a huge plus for financial stability. But it's not all smooth sailing. Organon faces some serious challenges. For starters, its debt is massive. $8.9 billion overall, with net debt hitting nearly $8 billion at the end of 2024. Patent expirations, like the recent loss of exclusivity for Atozet, have hit revenues hard, and mature markets are putting pressure on pricing. Don't forget, there are ongoing lawsuits following a 27% drop in the stock price this year, so risks, definitely there. Financial performance time. In 2024, Organon brought in $6.4 billion in revenue, up 3% if you factor out currency changes. Their margins are okay. Gross margin sits at 58.3%, operating margin 23.5%, and net profit margin at 20.3%. Adjusted EBITDA margin was 30.6%, a bit lower than last year's 33%, thanks to higher R&D spending. For 2025, they're projecting revenues between $6.125 and $6.325 billion, with an EBITDA margin of 31 to 32%. Free cash flow in 2024 was $747 million, helping them chip away at that debt load. On dividends, here's the scoop. Organon paid a steady 28 cents per quarter from 2021 to 2024, but slashed it to just 2 cents in 2025 to focus on debt. The yield is now only 0.84%, so if you're after steady dividend growth, this stock probably isn't your top pick. How does Organon stack up against rivals? Merck's profit margins are higher at about 70%, while Viatris is lower at 40%. Organon's debt stands out, especially compared to Gilead, which has a much stronger balance sheet. Still, Organon's focus on women's health and biosimilars gives it a unique edge in the sector. So what's the future look like? Looking out to 2030 and even 2050, Organon's aiming to grow in women's health and biosimilars. Products like Nexplanon and new launches could drive growth. But there are political risks. Drug pricing regulations or trade sanctions could impact margins. Demand for women's health solutions is a positive, but let's be real, a $1,000 stock price just isn't likely. That would mean a 100-fold jump from today's $10.05. Even with crazy good growth, maybe $100 to $200 by 2050 is realistic. Bottom line, Organon has some growth potential in women's health and biosimilars, but heavy debt and tough competition are big hurdles. If you're a long-term investor, there's a case for holding. But a $1,000 stock price? That's a stretch. Subscribe for more stock deep dives and let me know your thoughts in the comments.